Hi, welcome to this video day, which is on the 19th of November. It's Monday and it's 7:30 p.m. GMT. We're just going to be looking at a couple of trade setups today. Both include the CAD. They're going to be USD CAD, CAD JPY. We'll go to the charts in a moment. Now, I'm going to be looking, obviously, at the technical picture, drawing some levels of entry, stop and target. But I also want to back up my technicals with sentiment analysis and also discuss a little about intermarket analysis. If you're a Forex trader, if you add intermarket analysis into your strategy, it will really help you in determining where Forex pairs are going long term. Now, intermarket analysis is just simply the study of other asset classes to work out which way currencies might go. And in this instance, we're going to be looking at commodities and bonds. Okay. Now, in terms of the charts, we are going to go to them now. And just when I'm doing my analysis, please do keep in mind, it is my view as of right now. It can change in line with the market conditions. If you want all our Forex trading techniques and our technical analysis of 14 major Forex pairs on a daily basis, you can click on the link beneath this video and get live access to our member center. Right, we're going to start first of all with USD CAD. On the USD CAD weekly chart, just very quickly before we get to the daily chart, and draw levels of entry, stop and target. But the weekly chart, you can see the really big levels. Now, like I said, I'm extremely bullish of the USD, bearish of the CAD. And the key level of support is there. Okay, so really 131. You've got body, body, body. That big blue takes round. Had a red last week, now we're blue this week. I know it's only one day. I don't see much downside in this one. I'll just draw a trajectory in as well. Just get double trend line support there. Okay, now I'm just looking for a big move to the upside now. If we come through 132 here, then I think we'll be off to the upside. First target for us is up towards the 134 level. Sorry, let me get my line straight. And then my reading of sentiment and fundamentals gives us a target up to 137. Okay, so if this goes to plan, now I'll explain my logic of why I think the USD is going up. It'll be about 500 pips in terms of potential upside, and the risk will be around 150 pips. Okay, so let's shift to the daily chart, do our levels of entry, stop and target, and round up the fundamentals and sentiment as well. Right, I'll just draw my levels of entry, stop and target at the moment, but just want to look at the fundamentals, which I believe are firmly bearish for the Canadian dollar. And in terms of intermarket analysis, obviously I mentioned it earlier on. For new viewers, we very often do intermarket analysis when we do analysis of Forex pairs. And good example would be yesterday's video on the Japanese yen, where we were really looking at the bond market as being bullish for the yen. Here I want to look at commodities as well. Obviously Canadian dollar, a commodity currency, and an important one for Canada is crude oil. Now, in terms of traders, when they think of the Canadian dollar and looking at crude oil, they'll look at WTI. Okay, you should really look at WCS, because that is the benchmark crude for Canada. It's the important one. It's heavy crude. Okay, and you want to keep an eye on the price of it and also its discount to WTI. Now I'll explain what all this means. We're about $16 a barrel at the moment. In October, the WCS traded at a record $50 per barrel discount to WTI. There's always going to be a discount, but Canadian oil producers do not want it too wide. It's not too far off that at the moment. Okay, now in terms of the Bank of Canada, they make a lot of economic projections based upon the price of WCS. Their economic projections, in terms of how the economy is going to do, etc., going forward, $35 a barrel is the price that they've got. It's only 16 at the moment, and the discount is really wide. Now that's going to have an impact on the Bank of Canada's thinking. Yeah, but oil is Canada's largest export product. Well, of course it is. I'm sure everyone knows that. It does account for up to a third of business capital spending. That is being cut back at the moment. Okay. Yeah, a lot of Canadian oil producers are in real trouble. Yeah, one CEO of a company, I saw him saying in the media that at the moment it's like they're selling crude at fire sale prices to the US. He said it's truly terrible. We've got a lot of pipeline problems in Canada as well. So just generally, yeah, Canadian crude exporters are having a terrible time. And obviously, yeah, it's going to have a big impact on the Canadian economy. So are they going to raise rates, the Bank of Canada? Well, the market seems to think, yeah, some people think there could be one in December, but it's pretty well discounted for January. I think the Bank of Canada will be very cautious with the price where it is. Now, is crude oil going to have a dramatic recovery? No, not in our view. It can bounce a bit, but it's not going to go back to the levels we saw a few months ago. And I think the Bank of Canada be very, very cautious, okay? Market is very bullish, though, on interest rate rises. Take a look at this guy here. Chief economist at the Bank of Montreal said the bank is now calling for 3 rate hikes in 2019. One in January, one in April, one in July. Okay, the bond market is definitely pricing in one hike for the new year almost fully. In January, you can see that in the bond market, okay? It's probably not going to happen, in our view. The Canadian economy is kind of peaking. Don't think the Bank of Canada would want to hike rates anyway. In terms of they don't want to get too close to the US. Yeah, it's an export-led nation. Why would they want to hike rates? You've got a lot of people nervous about more rates in Canada. I just think they're going to be very cautious. Even if they do hike in January, it's priced in. In terms of the US, obviously rate hikes, market says, well, they're priced in the new year. Well, maybe so, but they're probably going to do them. Okay. Yeah, the economy's going well enough in the US for the Fed to keep hiking, as you can gather. In Canada, no, not from our reading of the fundamentals. Now, in terms of the technicals, it's a scrappy chart. It's quite interesting, okay? And I think once you know the fundamentals and sentiment behind the chart, it just makes the chart easier. Now, in terms of the USD, we tried to buy it here, actually. I thought it was a great trade. Got stopped out the next day, but we caught it back here off the lows. And it's moved higher ever since. We've had a few trades in it. But what I like about the chart is when we break up here with that big blue off the 20-day moving average, prices tend to find support in or just beneath it, on or just beneath it. I mean, this red here just pokes through a little bit, blue immediately comes back, red comes through, immediately rejected, blue bounce, red slightly through, again up, red slightly through on Friday, blue, the low is on the 20-day moving average. So 20-day moving average basically has been supporting the USD, and it's made quite a decent move to the upside. There's more to come. I'm just going to draw a quick trajectory. So there, which really is just behind the 20-day moving average. First level of support, in my view, is there. Sorry if I could draw my lines straight. 3 candle bodies, near enough for the 20-day and the other trajectory. So a lot of support here, but that's first level support. I wouldn't put my stop behind first level support. As I've said, 131 key level on the weekly chart. I'll be back behind the level. Okay. We're long at the moment. It's at 130.50. So I'm giving it a little bit of room. Okay. Now, if you wanted to come in, where would you come in? Well, I'm bullish already and in, but you could just wait for the high to give way, really, in my view now. 132.20, something like that. Then see if she runs. A lot of people will see this as resistance here, this cluster of candles. If we get above 132, I think those candles be taken straight out, and we will head up towards first target at 133.90. Okay, I say this quite frequently in videos. If you're doing long-term trends, always do 2 trades. Okay, split your, say you're risking 2%, it's 2 trades of 1%, and you can bank 1 out into this level. Okay, we come back, you could basically buy the dip, or just drop her in on the other side of the round number. So get clear of the round number. Okay, then drop her back in. What you've got is probability on your side. You may miss a few pips, so it won't matter. If you get through 134, then she should travel north. If she dips back, you can either put it back in or not. You put some money in the bank, if that makes sense. Hopefully it does. So yeah, just pretty bullish of it, and I think it looks a decent trade in terms of risk against reward, and those big fundamentals behind the chart, I see them as bearish, the Canadian dollar, and the sentiment still remains pretty bullish towards the Canadian dollar. So we shall see with this trade. Now let's go to CAD JPY, which we've done a few videos on before. Had a nice fall, and then it started to travel sideways. But now I think the next leg of the downtrend could be starting. So let's go to the chart. Right, on CAD JPY day, just draw my levels in a moment. Now, in terms of this pair, I'm not doing the weekly chart this week. I will give the weekly support levels. Just very, very bearish. You can go and check the weekly chart yourself. Now, obviously, we're extremely bearish of the CAD in terms of fundamentals and sentiment. We're extremely bullish of the yen. I'm not going to cover the yen fundamentals here. I did a video yesterday generally on the yen. If you want to know them, you can go and look at that video. Now, just in terms of for new viewers, our first video, we became very interested in when we came up this 89 level. You had a poke through the level here, came red, that blue poke, tail above that tail, no more bars as far as we're concerned. And sorry, I can't get my line straight or my line in. We came through those 2 bodies there. Okay, there we go. So basically 88.65 in, we have a nice tumble, you get the retracement, and now we're at about 85.50, so about 315 pips. But I think there is a lot more to come on the downside, and I quite like the way, we came down quite strongly. We have this retracement. 87 is a weekly resistance level, also with this big red slices down. I won't draw the level in, you can see it. And then we're off to the downside. A little bit of a fight around the 20-day moving average, and then red and moving away from it. Now, in terms of just for any members of ours, I am moving the stop down from 87.30. I'll tell you where to in a moment, and for anyone new and looking to put this position on, I'll give the stop in a second as well. Now, in terms of resistance, basically this trajectory just behind 86. You've got the 20-day moving average on 86, and you've got 2 tails and 2 bodies that line up at about 86.20. Okay, now in terms of coming in fresh to the position, where would you come in? I really wouldn't give it too much more than coming in through the low. Okay, then I think she's going to run. Now, in terms of stop, obviously got big resistance here of the 20, the round number, and the 2 crossing lines. I would go 86.70. That will be my stop now. Where we're going to go to on the downside, well, technical analysts will look at this cluster of candles here. I do not think that they will hold at all. Going to go straight down to the lows we see here towards 82. Then I think weekly support at 81. Longer term, I'm looking for 75. So 1,000 pips from where we are now. Now, obviously, that's long term. It could change. As I keep saying, I could change my view at any time. I could, but at the moment, I'm just so bearish of the CAD. Okay, so we're looking for a really good break to the downside. Just the first target is nearly 3-1 risk to reward, and obviously if we get to the lower levels it gets even better, but obviously that's if my view comes right. This has been a good trade so far. A little bit frustrating when we had that rally towards 87, but now she seems to be gaining traction. Looks like she could break support and really start to pick up downside momentum. And in terms of just for new viewers again, when you actually make a judgment on the sentiment, you do intermarket analysis, it just makes your charting so much easier, in my view. Keep your chart nice, clean and simple. Okay, so I like the look of both these pairs, obviously. We shall see how they go. Thank you very much for watching me as usual. Take care. Have a good day.